name is Muhammad Hazim bin Muhammad Asri. The first one is introduction to Islamic banking and instrument. Islamic banking also referred to as Islamic finance or Sharia compliant finance, refer to finance or banking activity that adhere to Sharia. How do Islamic banks make money? To earn money without the typical practice of charging interest, Islamic bank use equity participation system, which is similar to profit sharing. Equity participation means if a bank loan money to a business, the business will pay back the loan without interest, but instead give the bank a share in its profit. If the business default or does not earn a profit, then the bank also does not benefit. Okay, the example of Islamic banking is the Mid-Ram Saving Bank, established in 1963 in Egypt. Is commonly referred to as the first example of Islamic banking in the modern world. When Mid-Ram loaned money to business, it did so on a profit sharing model. The bank project was closed in the 1967 due to political factor, but during its year of operation, the bank exceeds a great deal of caution, only approved about 40% of its business loan application. However, in economically good time, the bank default ratio was said to be zero. Okay, the basics of Islamic banking. Islamic banking is grounded in the tenets of Islamic faith as they relate to commercial transaction. The principle of Islamic banking are derived from the Quran, the central religious text of Islam. In Islam banking, all transactions must be compliant with Sharia, the legal code of Islam. The rule that govern commercial transaction in Islamic banking are referred to as fiqh al-mu'amalat. The differences between conventional and Islamic banking. One of the primary differences between conventional banking system and Islamic banking is that Islamic banking prohibits usury and speculation. Sharia strictly prohibits any form of speculation or gambling, which is referred to as maisir. Sharia also prohibits taking interest on loan. Also, any investment involving item or substances that are prohibited in the Quran, including alcohol, gambling or pork, are also prohibited. In this way, Islamic banking can be considered a culturally distinct form of ethical investing. The principle of Islamic finance is the first one is paying or charging an interest. Islam consider leading with interest payment as an exploitative practice that favor the lender at the expenses of the borrower. According to Sharia law, interest is a usury, or we call riba, which is strictly prohibited. The second one is investing in business, involved in prohibited activities. Some activities such as producing and selling alcohol or pork are prohibited in Islam. The activity are considered haram or forbidden. Therefore, investing in such activity is likewise forbidden. The third one is speculation or maisir. Sharia strictly prohibit any form of speculation or gambling, which is called maisir. Thus, Islamic financial institution can be involved in contract where the ownership of goods depend on uncertain event in the future. The fourth one is uncertainty and risk, or we call gara. The rule of Islamic finance ban participation in contract with excessive risk and or uncertainty. The term gara measure the legitimacy of risk or uncertainty in investment. The types of financing arrangement: profit and loss sharing partnership, or we call mudarabah. Mudarabah is a profit and loss sharing partnership agreement where one partner provide the capital to another partner who is responsible for the management and investment of the capital. The profit are shared between the parties according to a pre-agreed ratio. The profit and loss sharing joint venture, or we call musyaharakah. Musyaharakah is a form of joint venture or JV where all partners contribute capital and share the profit and loss on a pro rata basis. The major type of this joint venture are diminishing partnership. This means is a type of venture is commonly used to acquire property. The second one is a permanent musyaharakah. This type of joint venture does not have a specific end date and continues operating as long as the participant parties agree to continue operation. Generally, it is used to finance long-term project. After that is ijarah. Ijarah mean in this type of financing arrangement, the lessor who must own the property. They license the property to the license in exchange for a stream or rental and purchase payment, ending with the transfer of property ownership to the license. Okay, the last one is a fixed income instrument. Since leading the interest payment is forbidden by Sharia, there are no conventional bond in Islamic finance. However, there is an equivalent of bond called sukuk or Sharia compliant bond. The bond represents partial ownership in an asset, not a debt obligation.
Okay, Assalamualaikum. My name is Muhammad Zairuha bin Zuhaidi. Okay, today I will present about rule of Islamic bank. Okay, a bank under Islamic Sharia can act as an agent of the customer and can carry out the transaction on his behalf. Moreover, it can charge agency fee for the service. The agency fee can be charged in the following case, like payment, receiving of cash on behalf of the customer, inward bill of collection, outward bill of collection, letter of credit opening and acceptance, credit of export bill or bill of exchange. In the case the undertaking of guarantor commission and take-up commission can be Islamist. Bank will charge an agency fee for accepting the bill which is bought at face value. Lastly, underwriting and IPO service. Okay, role of the bank as guarantor, it has to first letter of guarantee, next shipping guarantee. Okay, next we going to advisor service. Most of the advisor service provided by the financial institute can be carried out easily in compliance with Sharia as long as the nature of business halal. Okay, like financial advisor service, privatization advisor service, equity placement, merger and acquisition advice, venture capital, trading, cash and portfolio management advice, brokerage service. Other all Islamic financial service and product is remittance, zakat dedication, sale and purchase of foreign currency, sale and purchase of travelling check, ATM service, electronic online transfer, telegraphy transfer, demand draft, pay order, locker and custodial service, syndicate fund arrangement service, opening of bank account, cleaning facility, sale and purchase of share stock, collection of dividend, electronic banking window, and lastly telephone banking.
My name is Zuraina binti Madad. I will present about sources of fund. Firstly, saving account. Saving accounts vary in terms of interest received by depositors based on their annual performance from new deposit. This is similar to the existing account except that it has no facilities for check. The bank should not give any return under the strict principle al-wadi'ah. Customer deposit in saving account is mobilized deposit of customer in compliance with the al-wadi'ah. In addition to the possibility of saving money from the from a money of profit, it accepts deposit from its customers seeking secure custody of their funds and a degree of convenience. The bank allows this customer to use their fund as long as they stay with the firm. The second one is current account. Current account are based on the wadi'ah concept, which is promise return of their fund to the deposit. At the same time, the depositors is not reimbursed for depositing money into a current account, as secure funds are not used for PLS activities. The fund collected in this account can be used instead only to meet the bank liquidity need and short-term bank transaction. Deposits may be withdrawn during banking hours with conducting checks, electronic machine, or via the counters. Because the deposit is put under trust, Islamic bank do not usually return any deposit of this nature. Lastly, investment deposit. This investment deposit divided by two, which is general investment account and specific investment account. Firstly, general investment account, it has a set income sharing distribution with predetermined ratio and maturity period for the investment account. The murabahah concept contract for general investment deposit, where depositors and the Islamic bank agree on the profit sharing and duration of the placement when the investment is placed. According to the murabahah concept, the bank receives contribution from its client for the general savings account. This fund is used by the bank as a corporate resources. Customers shall not be empowered to immediate investment management. Banks should have a freedom to handle the expenditure in halal and productive company as it fits. The second one, specific investment account, which is told that tells the depositors of the location of set, the total of sum they can spend, the expected gains, and the commitment risk involved. The mudarabah theory often extend to specific investment account is generally targeted at broader investors and organizations. The distinction in such fund and the investment plan is that the specific investment plan is connected to a single project, and that the borrower has the option of specifically participation in the bank's chosen project. Underlying contract for saving and current deposit. The Sharia principle applicable for saving account are al-wadi'ah, mudarabah, and al-qard al-san. However, al-qard is commonly offered by Islamic bank in the Middle East. The Sharia compliance of current account based on al-wadi'ah principle, which refers for a contract between of the owner of fund, which is account holder, and the bank for safekeeping purpose. This paper claims that deposits from savers are an important sources of financial strength for the Islamic bank. They use it to increase their capacity for financing operation and thereby increase profit for the shareholder. In addition, it argues that gift in wadi'ah and qard hasan allow because the excess or expected return is not contractual in nature, and the bank is under no obligation to provide a return, and return is purely in the nature of gift, whereby gift by definition do not constitute riba.
Okay, next we're going to use of fund. Use of fund has two categories. First, retail financing. Next, corporate financing. Okay, firstly, we're going to retail financing. Retail financing is the offering of credit facility or stage payment to suitable creditworthy customer. A number of borrowers are certainly finding it difficult to secure development and investment funding for traditional source. These are generally good borrowers who temporarily do not meet the bank credit criteria, primarily relating to a level of vacancy in their commercial property or lack of per se in residential development. We have internal and external funding source able to provide the funding. Okay, retail financing have 4 categories. First, home financing. Second, automobile financing. Third, personal financing. Fourth, credit financing. Okay, first we going to home financing. Okay, the bank will either sell the property at a higher price to the borrower under an installment plan, or rent it to the tenant or homeowner, and have them payment a contribution toward the principal balance of the home is month until it is paid off in full. Okay, home financing have 4 category. First, by bitaman ajil. Second, musyarakah mutanasikah. Third, paralel istinah. Fourth, tawaruk. Okay, next we going to automobile financing. You only have one, is al-ijarah tuma al-bay. Okay, the purpose of the financing under this contract is to provide financing to customer leave the required asset. Next we going to personal financing. First, personal financing have 3 category. First, ina'ah. Second, tawaruk. And third, if ahran. Next we going to the credit card. Credit card have 3 category. First, ina'ah. Second, tawaruk. Third is ujrah. Okay, corporate financing, it have 3 category. First is term. 2 category. First is sale base. Okay, sale base or murabahah. Okay, it mean also known as cost plus financing or different payment, cost plus profit sale, for the purpose of facilitating the purchase of inventories, part of semi-finished goods and raw material as required by the financing customer. Okay, next we going lease based or ijarah mutahaniyah bitamik. It means there are various forms of ijarah contract that can be used in structuring Islamic alternative contract to conventional term financing. The most common structure is ijarah mutahaniyah bitamik, whereby the leasing involve the element of transfer ownership at the end of a leasing tenure. Okay, next we going to work capital financing. Cash line, Islamic overdraft or revolving credit. Okay, it means the under concept of by al-inah, the financial institution we first sell to the customer and identify asset belonging to the bank at a different price with a profit margin higher than the financing value as per request by the customer. Okay, subsequently the customer will sell back the asset to the bank at a price equivalent to the value of the financing amount. Okay, the amount which is supposed to be disbursed to the customer as per the second sale execution will be the deposit into a suspend account. From this suspend account, the customer is allowed to overdraw his or her current account. Deal with the short-term needs of business. Next, usually structured based on either inah or tawaruk. And lastly, the financing tenure is usually up to maximum number of 5 years only. Okay, next we going to the last of corporate financing is about trade. Okay, trade have 5 category. First, Islamic trust receipt. Second, Islamic accepted bill. Third, Islamic bank guarantee. And last, Islamic shipping guarantee. Okay, the last one is project financing. Okay, project financing have 3 category. First, mudarabah. Second, istinah. And third, musyarakah.
My name is Muhammad Faiz Fakhruddin bin Shihabuddin. Today on my part is I want to present about Islamic trade financing and instruments. For the Islamic letter of credit, ILC can be said as an instrument of international trade, and it is one of the most secure methods for seller to be paid. Normally, letter of credit is used in business practice for long-distance trade and particularly important commission earning service for any bank. ISRA 2003 define Islamic letter of credit ILC is written undertaking given by the Islamic Bank IB to the seller at the request and on the instruction of the buyer to pay at sight or at a determinable future date a state sum of money within a prescribed time limit and again stimulate documents which must comply with terms and conditions. There are several contracts used by IB to offer ILC such as wakalah or agency, murabahah, cost plus profit and musyarakah that we call of partnership. All these three concepts and can exist at the same time in one single ILC transaction. Difference between murabaha letter of credit and musyarakah letter of credit. The operation trade transaction can be carried either by murabaha or musyarakah principles. The role or involvement of a bank in a particular business venture would determine whether murabaha or musyarakah is applied. For example, if the bank contributing to the capital investment jointly with the buyer, then it's said that the principle of musyarakah exists. However, if the bank is not one of the parties in a particular trade carried out by the buyer, principle of murabaha is applied. The bank-customer relationship in murabaha transacting is best described as seller-buyer relationship. Murabaha is a credit business transaction where the amount of purchase or debt is paid after the goods are sold to the final buyer. The bank will acquire the goods from the exporter for its customer. This is done through issuing a guarantee for a payment instrument to the exporter, which is an LOC. In Murabaha LOC, the bank has no management right and only benefits from the total capital invest where it earns some profit. The bank is not liable for any loss in business venture and only customer is responsible to honor the selling price to the bank on the agreed date. In contrast, musyarakah witness the investment of the bank in a particular business venture carried out by the buyer with both capital investment and roles played by the bank. The bank will involve in the business venture with capital will invest in agreed proportion. Through this investment, the bank jointly owns the business with its customer. Currently, the bank provides consultation and advice on the management of funds and the customer runs the daily business operation. Both parties will share the profit in accordance to the ratio of the invest capital. In both transactions, the LOC is used as the payment mechanism, but under the murabaha trade transaction. Islamic trust receipt. It is one of mechanism to help finance domestic or international trade document drawn by against ILC or wakalah in what bills for collection. Islamic trust receipt is issued by IB to the customer based on the concept of murabaha for financing the purchase of goods. ISRA 2003 assert it is document of trust signed by the customer, the strength on which the Islamic bank allows the customer to obtain release of the merchandise but makes a lump sum payment at a later date. The first procedure involved in modus operandi of IATR is the customers must first have an approved IATR line. The request for financing must include submission of relevant documentary evidence of the underlying transactions and compliance to the terms of the facility. The customer informs the bank of his letter of credit requirement and requests the bank to purchase the goods. The Islamic bank retains the legal title to the goods but relinquishes physical possession to the buyer or importer. Islamic Acceptance Bill. Islamic bankers acceptance Islamic, well known as acceptor bills. I accept bills IABI, previously known as Islamic Accept Bill, were introduced in 1991 through the Islamic financing mechanism can encourage and promote both foreign and domestic trade. ABI is a bill of exchange which is drawn by bank and expected by importer or buyer creating a debt owing to the bank. The ABI formula based on two Sharia concepts consists of Ba'idain that we call is debt trading and Murabaha is cost plus. For the Islamic Shipping Guarantee, ISG guarantee will known as shipping guarantee. I is one of facility that the Islamic trade financing provided. This facility is a document issued by the bank to the shipping company that allows the importer or buyer to collect the goods from the shipping without the presentation of the original bill of lading. This is we call defined as a security provided by a party to the owner of the goods who deposit by his goods with the shipping company, whereby any subsequent by claim by owner for his goods must be made by the guarantor of the bank. Under kafalah, in case default is function as contract for performance of financial guarantee given by one party to set free liability of third party. For the Islamic Bank Guarantee IBG, a special guarantee which creates to replace the function of conventional bank guarantee based to its specifications. According to EISRA 2013, under a Sharia and in accordance with the principle of kafalah, an Islamic bank may issue, at the request of the customers, an Islamic bank's guarantee IBG to a beneficiary named by customers. There also an irreversible return obligation which involve Islamic contract known as a kafalah. For the comparative of Islamic Bank Guarantee and Islamic Letter of Credit, for the Islamic Bank Guarantee, a legal instrument executed by Islamic Bank on a behalf of its customer on applicant to the beneficiary in connection with the contract entered between the applicant and beneficiary. Second, two type of guarantee: financial guarantee and performance guarantee. And the third, Sharia principle of this Islamic Bank Guarantee is a kafalah, and second, wakalah, BIL istimar or investment agency, and kafalah guarantee. For the Islamic Bank Guarantee, the definition and instrument issued by Islamic Bank on a behalf of and for the account of the buyer of goods. For the future, Islamic Bank undertake the bill of exchange and trade document of seller when drawn or represented according to the terms of the credit document will be duly honored. For the Sharia principle of the Islamic Bank Guarantee that we call wakalah or agency, and murabaha that we call cost plus profit sale.
My name is Siti Nur Fatiha binti Abdul Aziz. I would like to present about other Islamic financing method. There are 8 other Islamic financing methods. Salam. It is an Islamic contract in which full payment is made in advance for a specific good. The salam contract is used by Islamic bank for different purposes, especially to finance agricultural sector. It is most effective financing tools to provide microfinance services to small and needy farmers. Generally, the parallel salam is used in modern Islamic financial institutions. There are 2 types of salam. The first one is ordinary salam. The second one is parallel salam. In ordinary salam, it is normal salam contract which is discussed by jurists and scholars in classical fiqh, but in parasalan, it is not allowed for buyer in salah contract to sell the commodity before he takes the possession of the commodity. However, it is allowed for buyer in salah contract to make a parasalan contract for the same good. The second other Islamic financing method is istina. Istina means asking someone to construct, build or manufacture an asset. Guarantee of istina. The price of the goods or the asset to be constructed will become a debt obligation on the client. By entering istina contract, they will be carrying a performance risk. Bank client has no recourse or no with any contractual relationship with the actual manufacturer or contractor. The bank always be liable for any failure. This risk, however, can be reduced by taking performance bond from the manufacturer or contractor. How is the transaction be constructed? The deal usually starts with the client approaching the bank to finance, say, a new building. The third of other Islamic financing method is Hasan, which can be called benevolent loan. Hasan is a loan extended on a goodwill basis, mainly for welfare purpose. The borrower need only pay back the amount they borrowed, with no interest. Okay, the fourth one for the other Islamic financing method are Ar-Rahnun. Ar-Rahnun, also known as Arahan. It is Islamic pawnbroking for short-term collateralized borrowing. The development of Ar-Rahnun in Malaysia provide an alternative pawnbroking service for borrower, which is in accordance to Sharia principle. Well, Ar-Rahnun is based on these three Islamic concepts. First one is Qadul Hasan. Is the borrower is required to pay only the amount borrowed. The second one is Ar-Rahnun and Al-Wadiyah. It means the borrower is required to place a valuable asset as a collateral to get a loan and to ensure repayment, like a mortgage housing loan. The third one is Al-Ujrah. It means the lender is allowed to change a fee for safekeeping of the pawn items. As we can see, the mechanic of Ar-Rahnun applied in Malaysia. Ar-Rahnun is a relatively new microcredit instrument. Only gold and jewelry made of gold can be pawned. It is available to both locals and foreigners, Muslim and non-Muslim alike. Long tenure range from 1 to 6 months. Borrower have a choice either to repay either via lump sum or by monthly installment. Generally, the margin of finance is from a minimum of 100 up to 60 to 70% of the value of the gold. In the event that borrower cannot repay the loan, it is possible to be granted extension of up to 3 months. If those are still unable to repay the loan, the pawn item will be auctioned off and any surplus less outstanding amount and charges will be returned to the borrower. Ar-Rahnun is free from any riba and ghara element. Borrowers only need to pay the principal plus a safekeeping fee as agreed in the agreement during the maturity date. The fifth of other Islamic financing method is Ba'inah. Ba'inah refers to an agreement that involves sale of an asset to the purchaser on a deferred basis and subsequent purchase of the asset in a cash price lower than the deferred sale price of or vice versa, and which complies with the specific requirement of Ba'inah. Diminishing musyarakah. It is the sixth other Islamic financing method. It is a form of partnership which ends with the complete ownership of the partner who purchases the share of another partner in that project by redeeming mechanism agreed between both of them. Okay, 7. Tawaruk. Tawaruk means to buy on credit and sell at the spot value. This transaction is nowadays being used by many Islamic banks for liquidity management and as a mode of financing, especially for personal financing and a credit card. Lastly, Islamic credit card are normally used in retail financing. Credit card is a revolving credit facility within the credit limit, and the credit period is determined by the issuer of the card. It is also a means of payment.
Okay, the last one is conclusion. Customer demanding Islamic banking and finance service. Even some attribute this to the greater awareness of religious value, plus the argue that this is by default, as the only Islamic bank is owned by the government, but still this trend might have an impact on the key determinant of demand toward the Islamic bank. That's all, and thank you.